In business tonight, Singapore and some of its Southeast Asian neighbours could reap up to 155 billion Singapore dollars in GDP growth by harnessing opportunities in the green economy. That's according to a report by global management consulting firm Bain Company and Temasek, among others. In its sixth edition, the report suggests a systems-based approach that can help drive growth in Southeast Asia. First, the projected benefits of putting in place system-level solutions. Beyond billions in GDP growth for the Southeast Asia 6 by 2030, they could also create 900,000 jobs in a green economy and significantly cut carbon emissions. The Southeast Asia 6 refers to Thailand, Malaysia, Singapore, Indonesia, the Philippines, and Vietnam. So what are these systems-level solutions? One is to create a sustainable bioeconomy, thus by improving agricultural practices and scaling the use of bio-waste. There are also ideas to develop regional electric vehicle supply chains amid low demand and invest in grid infrastructure to keep up with developments like renewables. The report also proposes other measures that can speed up regional decarbonization. These include expanding access to climate finance and further developing carbon markets to support larger projects. It says artificial intelligence can cut emissions by 3 to 5% in high-emitting sectors like power and transport, with targeted investment, policy support, and scaled adoption. Southeast Asia can also work with the wider Asia-Pacific region to benefit from the green economy. This is as energy security is a shared priority for the region. A large portion of Southeast Asia's foreign direct investment and trade comes from the Asia-Pacific. A green transition in both regions can also complement each other. Private green investments in Southeast Asia increased 40% to $10.3 billion from 2023 to 2024. During the same period, green investments in Singapore almost tripled to $3.5 billion. This means Singapore can take advantage of foreign capital to move to a more sustainable economy. And to share more on Singapore's role in this green transition is Dale Hardcastle, partner and co-director of the Global Sustainability Innovation Centre at Bain Company. Mr. Hardcastle, thank you for joining us. Now, the report has projected billions in GDP growth. How different will growth look like among the countries? And how much is Singapore in particular expected to grow?
Okay, I think that's a great question. Really thinking about the green transition as a strategic opportunity for Southeast Asia and also the broader, APAC region to be more competitive and sort of adopt some additional growth. I think in the report, as you say, we see a number of different things. One, if we look at things on a regional basis for the Southeast Asia 6, there's an opportunity for an additional 2% of GDP growth if we look out to sort of 2030. This is around $120 billion of additional sort of upside. That could be almost kind of 1 million sort of jobs, and at the same time also help us to capture our emissions. Now, it's a little bit tricky to exactly sort of, break this down and say how much is sort of Singapore versus, country by country. In some reasons, because, this is really an ecosystem as we think about electric vehicles and the carbon market and many sort of other things. But given Singapore's sort of position as a hub of sustainability and a lot of the different sort of opportunities that are sort of anchored here, and particularly enablers like AI and transition finance, we think it will have kind of a material impact and benefit for it.
Now, what could be some obstacles in harnessing green solutions in Singapore? And do the challenges in other countries look the same?
Yeah. So I think a great question. If we look at kind of the situation across sort of different countries, having sort of done the report for the last sort of few years together with our partners, Gen Zero, Google, Temasek and Standard Chartered, we've looked at a lot of the different sort of, structural constraints that hold back progress. One, kind of a long tradition, kind of depending on sort of, fossil fuels, a lot of kind of investment in kind of coal power and sort of other things. The questions about sort of, where to invest and how to create the right incentives and other things. Singapore, of course, has, I think, been at the forefront of kind of, driving decarbonization and looking at sort of green opportunities. And we've heard about many of those things sort of today at Ecosperity, from looking at sustainable aviation fuel and other things. So I think from a Singapore perspective, it's really about how do we find more innovative ways to add more green power to the island? How can we potentially develop partnerships with our sort of neighbors to potentially bring green power in from countries that have a lot more land and sort of opportunity, where Singapore can be the market? I think in contrast, if we look at our sort of neighbors, there are more sort of, I think, fundamental sort of constraints where they are kind of facing sort of competing opportunities from a government sort of perspective of how do we sort of drive growth? How do we provide sort of energy to kind of developing sort of middle classes and other things? While at the same time, paying for sort of expensive transitions that go there. So whereas I think Singapore has some sort of unique challenges, kind of our neighbors are much more sort of focused on how do we sort of scale and do things differently.
Let's focus on the upside for Singapore. How much does Singapore stand to gain in terms of reaching its net zero goals?
So I think in the report, we looked at this particular question around, delivering its sort of 2030, targets, because the focus of the report, I think, is really what can we do today? How can we do things differently? And how do we sort of move forward to at least achieve that sort of first critical milestone in sort of 2030? Looking at the region overall, we estimate, through the things that we can do, there's an opportunity to reduce overall sort of emissions within sort of Southeast Asia by about 50%. That totals, 300 sort of megatons across the various sort of countries that are there. And I think this is extremely important because if we look at, where we stand relative to our climate goals, the region has made great progress, but is not on track. Big targets have been set in terms of net zero, and there have been some transformative things that have been done. But there is still a persistent gap between where we want to get to and the trajectory that we're on. We estimate that kind of on the order of kind of 13% for sort of Asia overall, and sort of 9% as we sort of look at Southeast Asia particularly.
Well, thank you so much, Dale Hardcastle from Bain Company's Global Sustainability and Innovation Center. Thank you so much for your insights.
Thank you.